If you are planning on purchasing an investment property in the Greater Vancouver area, this is perfect information for you so you can make an informative decision. Hi, my name is Deanna. I'm the founder of West Coast Lifestyle Group. We provide real estate services for buyers and sellers on the West Coast. Now, I hope you enjoyed this video. It's going to be filled with information about investing in real estate on the West Coast. So if you do, please like the video, share, and also subscribe to our channel. Canada is such a wonderful place. It welcomes buyers from all different sorts of countries to invest, to purchase property here, and doesn't limit them. Now, certain banks may limit the amount of properties that you can purchase due to financing restrictions. Here is some valuable information when you're deciding to purchase investment property in the Greater Vancouver area. So when purchasing an investment property, it is really important to do the math. So understanding what your expenses are going to be as opposed to what the tenant may pay you in return. So find out what the strata fees, what the property taxes are, what some of the extra costs may be associated if there's a special assessment that comes up or a tenant requires a change in appliance. So it is about the math. You may not always make an extra income from the rental, but it is important to know that the home values are the important component when it comes to investing. If you are purchasing for the purpose of investment, not to reside in this home, the banks will ask you for a minimum 20% down, possibly 35% down or more. Now, your interest rates might be a little bit more as well. Most lenders will consider 50% of the rental income to get you pre-approved for this home. Now, 50% is going to get lumped into your income. Your debts are going to be also associated with this, and some banks will also require a rental agreement with your tenant. As an investor with 20% down or more, you may be eligible for a 30-year amortization mortgage, which may bring down your mortgage payments on a monthly basis. Good investment properties provide cash flow in 4 different ways: monthly cash flow, appreciation, improvements, and equity built up. These are the taxes that you may want to consider when purchasing an investment property. Number 1 would be property transfer tax. So that is 1% on the first $200,000 of the purchase price and 2% on the balance up to $2 million. GST. GST is charged on brand new homes if you are purchasing directly from the developer or a property that's never been resided in. Income tax on your rental income. Also, if you are a non-resident to Canada, there is a 20% tax on any purchase here. And capital gains. Now, capital gains is a very interesting tax, and it's only applicable when you sell your home. So 50% of the equity, which means 50% of the monies that you will make on your home, will be taxed at your marginal tax rate. Now, please contact your accountant, as I am not an accountant myself, and if you want more information about the capital gains, about rental income as well. As an investor, your qualification for any government programs may be limited. If you decide to live in this property, the requirements for financing and the government opportunities for buyer grants may be different. Therefore, you could require 5% down instead of 20%, and your interest rates might be lower as well. The banks will be definitely happy to give you more information. And of course, if you are planning on living in a property, all of these things will be different. So please feel free to contact us, and we're going to be happy to go into detail about those things. I hope you found this little bit of information helpful, and I do hope you stay tuned. Check back with us again, as we will be updating and providing more information as it becomes available. So please like our video, share, comment below, and subscribe.